So welcome back, guys. Today we have the nasdaq e-mini futures, the December contract. So you are having a trade I simulated to take on the e-mini futures. So this is how I managed and how I was in the trade. So going into the opening bell, the market was in a consolidation. We accumulated. Most of the traders were manipulated actually, because I be watching those lives, and most of the traders were fucked severely in the market. And we have the market rallying higher going into 11 a.m. trading. So as the market rallies higher, it gives you going into the macro. So from 10:50 to 11:10, the market gives you a macro that is that arrow you're having right there up, and that is where the move starts from. So I'm drawing my fib levels, as you all know how I draw them. I'm having the 12 a.m. to 12:30 opening range marked as these purple lines down here, as you can see on the chart, and I'm having the 9:30 to 10 a.m. opening range also marked. So currently we are trading to that. I'm having the daily fair value gap, consequent encroachment. Remember, we are having a daily fair value gap which the market is working into. So right now we have traded below the daily fair value gap, consequent encroachment, and closed below first presentation fair value gap at 9:30. So we are heading for the low that was formed prior to going into the 11 a.m. So right there I just marked a low in the pre-session as my sell side liquidity, just like that. So where we are from that high to that low, if you simulate your extrapolations, you're going to have the negative 0.25. That's how far the market can go below that low, and it happens to align with the sell side liquidity. So I expect speed going into that, but unlikely the market doesn't give me speed, and it formulates something that is a signature in price going into 11:30. That is the lunch macro opening. So it formulates for me something that enables me to track a move lower than what I had expected. So the lunch macro, as you all know, we happen to go from 11:30 going into 1:30. That's what I was marking right there. This chart is sped up. I didn't want to make a long video, so that there was the 10:50 to 11:10 macro that I was talking about, and that is the lunch macro. So from 11:30 to 1:30, and right there you have the market rallying back into first presentation. I'm having an order block, that line that I've just staggered, and I'm having my daily fair value gap, consequent encroachment. So I'm looking into that, going into sell side and hoping the market to tap the 12 p.m. to 12:30 opening range that is denoted down there with the purple lines. So currently we are in the 9:30 to 10 a.m. opening range, and having the market moving slowly. And in this, what do I want you to get from this? This is how you manage a trade, and this is how you can be able to manage runs that exceed. So here, this trade can be longer than a person who trades as a long-term trader. So I can hold a position on the 1 minute time frame without going to another time frame and manage to catch a move that gives me a reward that is greater than those that call it on the higher time frame. Mind you, I'm having a lower stop loss. So we have the market trading into first presentation right there, and it nails the 0.5 or consequent encroachment of the fair value gap on the daily cleanly right there, that line where my cursor is, and it gives us a rejection. So whatever the market does, I'm hoping for the market to drop from right where it is We can manipulate higher, I have no problem with that, but note that the bodies tell the story and the wicks do the damage. Okay, so let's look into price. the 9:30 to 10 a.m. opening range, I'm using that as reference to my trading. So I didn't want to have my chart clogged, so that's why I didn't draw quadrants on that. So I'm using the quadrants of the daily fair value gap, and I'm having the low of that fair value gap at 24965 even, and I'm having constant encroachment at 25063 even, and I'm having the high at 25160.75. So my first presentation is right there. We have the daily fair value gap constant encroachment, so I'm expecting the market to rally higher and tap that order block, which is denoted by that red line, the negative OB, and I'm having a fair value gap in it. So that is a unicorn model. That right there is the 9:30 to 10 a.m. opening range low, right? That I'm marking right now, and that is the high of the opening range. So this is my new markings. I think it looks cool. I think it looks nice. I don't think I have someone marking my just like how I'm doing it right now. I'm excited. It looks nice. It looks so ethical. It looks so legit. It looks so what? I don't know. I don't know how to describe that, but it looks so nice. I marked this chart, and this is how you monitor progress. By the time I'm going to come for lives of trading, I'm going to be something else. So that's the speed I was talking about that I needed. I'm having a breaker mark there. I'm having a high, a low, and then a high going into the first presentation. So the market drops, forming a lower low. So at that low, we collect partials, and now we have closed below the breaker. So I'm expecting that to hold. Okay, I'm expecting that to hold. I sped up this video. I didn't want it to be too long, but it happened to take a little bit of time than what I had expected, but in a good way, because there are some concepts I wouldn't have gotten the time to teach or to remind you about, because there's nothing new I'm teaching. Trust me, ICT taught everything, and there is no way I can return to the guy or be thankful and grateful to what he taught than spreading the gospel, if I may say. But I'm Muslim, so there is no way. We call it dawah this side, so there is no way. Okay, so I form a volume imbalance right there. Note that right there, that is a volume imbalance. Those two red lines that I have just noted right there. So the market gives me a sharp return into that breaker, and I expect the market to stay in the lower half of that fair value gap, giving me an institutional order flow entry drill, what I'm marking right there. I do not expect the market to retest into the surpass the lower quadrant of that. I'm expecting it to stay below. If I was to mark quadrants on that fair value gap, that large fair value gap, because I'm close to my target, I want the market to give me an institutional order flow entry drill to go to my target. So that's what I was telling you there. I want the market to stay below the lower half, and that's what the market does. We drop and we tap sell side right there, and the negative 0.25. Now that negative 0.25 was for the low that has the label of collect partials at this low. Now going into this sell side, where is the negative 0.25 of that sell side? You're going to see me marking that, and I'm going to extend my take profit. So that is an order block, a bearish order block formed right there. I'm having volume imbalance in it. This is how you have to be patient and happen to take full take profits and milk the market. You have to treat this thing as a cow, and in a good way, not breaking discipline or not playing with psychology, but in a good way. You have to milk this of every dollar it can give. So we are trading into the daily fair value gap low right there, that dotted line which has the zero, which is 24965 even. The market rallies back into our order block right there. This is like commentary, like it's like talking on a football match. But anyway, this feels lighter than marking myself. I don't need to move my cursor, I can just talk about it. So I expect us to drop into the daily fair value gap low, probably close below that, and then use that as resistance and drop lower into the 12 p.m. to 12:30 opening range high. So currently where we at, we are having time distortion going into the macro at 11:52, 12:10, just like that, noted right there. And like that, 11:50 to 12:10. I'm not marking anything. This was all recorded real time, not the daily fair value gap low. The market has traded into that but failed to close below that. Now I'm extending, that is the negative 0.25 of this sell side liquidity, not that short-term low that was formed that we took out, but this sell side liquidity just there. So I'm having my breaker, I'm having everything extended into price. I expect that breaker to hold and that volume imbalance not to be closed above. If it is closed above, I expect the market to correct right away and come back below. So what happens here? The market forms buy side, not the 0.25 fib level at 25014 even. That is where I'm having my buy side. So I expect the market to manipulate into that, giving me a turtle soup, staying in the lower half of that large fair value gap. As I told you, I expect the market to stay in the lower half of that. I didn't want the market to trade back into the 9:30 to 10 a.m. opening range low. Okay, so that is marking as minor buy side. Market has taken it out and I'm expecting a drop from that as a turtle soup entry. And my breaker is also getting respected. I want us to drop below my volume imbalance and then that negative orbit to reclaim its role to push price lower. Okay, so at the volume imbalances right there, if the market can give us a closure below that, that would be nice, and a closure below that line with the negative OB. As you can see right there, I'm expecting closure. Now this, if you reach at a level of doing this, then that's an achievement. Mind you, you're not making money, it doesn't matter. So this is how you put in the work, not the volume imbalance right there. I expect the closure below that negative order block right there. So this the bearish order block. I expect closure below that, and then we shall run from that going lower. Okay, the market is working between the order block and the volume imbalance. So I expect the moment I get closure, I want the market to move with speed, closing below the daily fair value gap low, because we have failed to close below that. And if you note, from that high to that low, if I put my optimal trade entry just like that, the market is giving me the optimal trade entries right there. I'm expecting closures below that. So my take profit has been extended from the 12 p.m. to 12:30 opening range high to almost the lower quadrant of that range. My market rallies lower. I expect closure below the daily fair value gap low, just like that. That is signature in price that the market is respecting, that the market is falling and we are still in delivering sell side. So there is what we call sell side liquidity and there is what we call sell side delivery. So sell side delivery is us delivering into sell stops, and buy side delivery is us delivering into buy stops. So basically I would call that a bullish market for sell side delivery, not that fair value gap right there that holds the market. We have those overlap of those two candles right there. I'm using that as a PDR, so I'm extending my fair value gap till there, and that aligns with half of that week where my box ends. I'm having half of that week as aligning with the top of my fair value gap, so I'm expecting that to be closed below and give me a bearish order block, not the daily fair value gap low. We have traded to the daily fair value gap low. I'm having a week right there, weeks are gaps. So yeah, I traded one more time into that fair value gap, the bearish fair value gap, expecting the market to fall anytime from now. If I'm to consider manipulation, how far can the market manipulate before it changing the move that took out the minor buy side up there into the institutional order flow entry drill? So that's where I'm having my break even stop loss, just like that. You may wanna close early, but you have to be sure about your draw on liquidity. So now we have the 12 p.m. to 12:30 opening range high. Market has delivered into that. If I'm to draw quadrants on that, going to find that the market did not reach the upper quadrant of that, just like that. Market did not reach the upper quadrant, so I'm seeing that as the market being inefficient still. Below that is the chart of ES. I'm going to be looking for some SMTs going into that low. So having the market basically accumulating. We have an accumulating market trading back into that order block right there. The opening range pushes price back higher with momentum, but I'm not afraid. I told you, do I know that now I'm fucked up or I'm not going to collect my profit after we surpass the move that takes out the minor buy side liquidity? So after that move, I'm expecting the market to drop lower again, and we continue to my target, or even surpass my target and continue lower, because that opening range can be used as a PDR, so that means it can be inversed and used for sales. Okay, we have formed equal lows right at the upper quadrant of the opening range. I'm looking into that. Market is showing that I'm still coming back. Let me first take out this. So now we are rallying high. I have the OB right there tagged, and the bearish fair value gap and the daily fair value gap low, plus my volume imbalances. I want you to look at those volume imbalances keenly. So as you can see, the body is still the story, the wicks do the damage. So I'm looking at the bodies, not the wicks. Looking at that volume imbalance right there, just like that. It has room for error, so the market might refer into a move above it or surpass it and then correct immediately. So we are trading back into that bearish fair value gap to reclaim its row. I'm having a tiny fair value gap right there, which I expect the market to inverse, just like that. That's an inversion fair value gap. So as long as the market has not yet closed below that, the market will not go lower. So as long as that is kept bullish, as long as the market is kept above that inversion fair value gap, the market will not drop into my target. So I'm looking for scenarios where the market is going to get pushed and induced into my target. So that's the trade, as you can see zoomed in, and we are trading back into the order block. Remember, the bodies are telling the story, the wicks are doing the damage, not the volume imbalance right there. It holds a lot of significance to price. Okay, so I have SMT at those highs, and that's an entry I expect on the October trade entry, just like that. But I have SMT at those highs with ES. It's going to show later in the videos. I have an SMT. Okay, as long as I haven't gotten a closure below that orange box, then the market is still manipulating higher. After it takes it out, I expect the market to just drop significantly. Still rejecting. We have went back up and the market has failed to close below that again, so I expect a measure of manipulation. What's my reference point? The order block and the volume imbalance. Okay. So the market is swelling back up. Most of the unworthy traders would have looked for an exit right there, but I'm seeing opportunities to cultivate on. So if I extend that volume imbalance in price, you're going to see it holding the market nicely. Just like that. The market is held by that to give me an SMT with ES. At those highs, you're going to be shown we are trading into the sweet spot. The market might drive back into the volume imbalance. The macro is done for 1150 to 1210. The macro is done. Okay, we'll trade back into that one more time. We reference into that. Not that the fib level, the one fib level hasn't been taken out yet, which is my stop loss for this entry of the fib levels, the 0.618, 0.705 and the 0.79. look at US. I'm having SMTs right there. Now I need my closure below the IFV, the inversion fair value gap. I expect it to get inversed right there. So now after that we start moving with speed. The bodies tell the story, the wicks do the damage. Okay. Okay, so that is beautiful delivery right there. Market taps the order block one more time. That candle has no bottom wick. Yeah, just like that. Market drops into half of the 12 to 12:30 opening range. Half of that, and the market completes and gives you your final take profit. So that's the trade with that. Therefore, thank you for watching. It might have taken a little bit longer, but thank you.